Hello everyone and welcome to the PutCallGenie website, dedicated to sharing a unique approach to trading options in the stock market. Where were you in October 2008? Ben Bernanke, head of the Federal Reserve at the time, said, September and October 2008 was the worst financial crisis in global history, including the Great Depression. This may be an overstatement, but the S&P 500 did decline from the highs of 1576 in October 2007 to the lows of 666 in March 2009, for a total loss of 57.7% of the value of the S&P 500. Trust me when I say that in those days, no one was willing to say where the bottom was, let alone predict the recovery and bull market into the new highs we have today. A new generation of investors have since entered the market that has steadily grown from 666 in March 2009 to 2351 as of this recording in February 19th, 2017. That is a 252% increase in a little less than 9 years. Mutual funds, 401ks, and stock investing accounts have gone steadily up. Keep in mind that investments in the stock market are often part of savings plans meant to assure a happy retirement. During the good times like this, it is easy to forget or ignore the fact that markets go through corrections, some of them quite brutal. But in 2008, many retirement dreams disappeared in thin air. In fact, between 2000 and 2009, it actually happened twice. Ironically, if you were caught in the market decline of 2008, it is very likely that you exited the market before it hit rock bottom. What is not very likely is that you actually entered the SPY at the bottom of 2009. How many people do you actually know that held their positions through the recovery by 2013 and beyond? Fast forward into today, as the market continued to reach new highs every week, you have to ask, how do I take advantage of this apparently never-ending bull market without the risk of losing 50% or more of my portfolio in an unexpected and steep market decline? Am I willing to wait 6 to 7 years for the markets to recover? In short, how do I sleep well at night when my retirement savings are at risk? Those who bought at the peak of the market in 2007 went through the worst-case scenario. Some may have partially protected their positions by selling calls, but in a steep decline, a short call covers only a small portion of the value of the stock. Astute options traders would sell call options, but in the current incredible rally, that seems dangerous, since there is no limit as to how high a stock may go. The iron condor is a neutral strategy that professionals use. However, the iron condor can be very unfavorable when the so-called black swan event occurs and the markets decline more than one or even two standard deviations below the moving average. Bearish option spreads may be used, but their potential gains are limited and your timing must be impeccable. The PutCallGenie plan not only protects you during unexpected market declines, the plan actually profits from rapid declines in individual stock prices. During periods of strong declines, the demand for option puts, and as a consequence of calls, increases dramatically. This is reflected in the VIX, or Volatility Index, which is a measurement of the implied volatility of options of stocks in the S&P 500. The implied volatility is a reflection of the demand for calls and puts for any stock, which appreciate due to uncertainty, unexpected news, or in advance of news events such as earnings. As the market reached new historical highs repeatedly, the old investment cliché, buy low, sell high, does not seem to apply, and buying high to sell higher is a fool's game. Look at this chart of Goldman Sachs, GS, for example. The strongest of stocks in this environment are the darlings of Wall Street, also known as high flyer or momentum stocks, that are priced to perfection. Yet they continue to surprise with ever increasing earnings growth. Buying these stocks seems unwise, but with every earnings beat, the prices jump 10% or more. How do we invest in these companies without the risk of buying at the very top? The answer is in entering a position that benefits from the strong momentum while the stock moves up, that is, delta gains, but that also benefit if the market suddenly reverses and the high flyers become strong decliners. Their low volatility becomes high volatility and the demand for their options spike above 40% or more. Hi, my name is Juan Sarmiento. I have spent the past 10 years of my 25-year trading career studying and trading the PutCallGenie plan. I'm doing it in front of an audience and accounting for it in a paper trading account. I want to show you how you can spend as little as 1 hour a week with a very high rate of return using a proven trading technique that has been perfected and tweaked over the last 9 years through a myriad of market conditions. You will be able to sleep well at night and embrace the sharp market sell-off and make money without giving up the chance of profit from a continued bull market. Using the PutCallGenie plan, the performance of my paper trading account was as strong during the market meltdown of the financial crisis of 2008 as during the more recent market rally. This is because the Genie trade is favored by both delta and vega gains, and to a lesser extent by theta gains. This means that it benefits from stock price appreciation and stock price depreciation, as well as from spikes in implied volatility and even time decay of the options at play. Let me be clear, the plan is complex and requires an understanding of options, as well as recognizing the right time and opportunities to enter the trade. Yet, it is well worth the effort to learn and prepare. Roman philosopher Seneca said, "Luck is what happens when preparation meets opportunity." The stock market is full of opportunities, but it's only with knowledge that you will be able to identify such opportunities and use the right instrument to take advantage of them and take your profits at the right time. It is very appropriate that Earl Nightingale complemented Seneca's phrase with his own. He said, "Opportunity is there all the time, but preparation is up to us." Yes, the one thing you're missing is the preparation, and I propose to help you get it. Whether you are a seasoned trader or simply an enthusiast of options, or even if you are just a beginner, here is what you will get with a 3-month, 6-month, or yearly subscription to the PutCallGenie plan. First, short video tutorials to get you from the basics of options to the Genie trade, which is certainly an advanced form of trading. Second, short video tutorials on the use of the most important features of the trading platform. Third, my very own selection, entry, adjustments, and exit. Once a week, I will be posting my selection in a spreadsheet that will demonstrate how the rules of entry apply and are met. You could follow along the trades in your own paper trading account until you become familiar with the plan. Fourth, complete accounting of the results of each trade. All trades will be kept in a paper trading account with an initial balance of $50,000. Last but not least, a discussion forum. Here you will be able to ask your questions, give your own opinions and experiences, make requests and suggestions, but very especially, you will be able to interact with other members. What are you waiting for? If you are ready to learn this powerful approach to options trading, please go to putcodegenie.com and locate the appropriate button and join us today. Also, feel free to subscribe to this YouTube channel by clicking on the subscribe button. Thank you.